Michael Saylor just revealed a massive shift happening inside the Bitcoin ecosystem. The rise of Bitcoin Treasury companies and Bitcoin-backed financial products. From Trump media issuing billions in debt to buy Bitcoin to Strike enabling fiat loans collateralized by Bitcoin, this is the beginning of a new corporate standard. Today we break down why this matters, what risks remain, and why self-custody is more important than ever before. Now, the first one is to do with this emergence of Bitcoin Treasury companies, which is in effect what his company has started out on this train journey of issuing debt in order to buy Bitcoin as that long-term store of value and to act as an increasingly hedge against inflation. And for me, it's not just inflation, against entropy. And as a result, he cited some interesting recent announcements at the Bitcoin Las Vegas conference, where Trump media have actually announced that they were going to issue debt, $2.5 billion worth of debt, in order to buy Bitcoin and store it in their corporate treasury reserve. And then similarly, 21 Capital, where they've actually partnered with the likes of Tether, SoftBank, and Cantor Fitzgerald, which is headed by Jack Mallers. They're doing something similar. And also, what's striking about 21 Capital and Jack Mallers, he's also the CEO of Strike. In addition to the Bitcoin Treasury company, there is also a notion of a Bitcoin development company, which is pretty much all about issuing those financial products that have Bitcoin bolted on, such that whenever the institutional lenders of the traditional debt or bonds, well, by bolting on Bitcoin, it will make the rate of return much more attractive to those lender issuers. And this is where Strike have actually rolled out an interesting product, a lending product, where they can issue fiat loans based on Bitcoin as collateral. Well, there isn't any need to part with your Bitcoin holdings. So in effect, you're going to be still holding on to your Bitcoins, even though it's under the custody of these financial products, platforms. Throughout the duration of the fiat loan, you still be able to have access to your Bitcoin collateralized holdings, and at the same time enjoy the fiat loan that you've taken out, which kind of forces like a vicious cycle whereby on the one hand you're getting fiat loans and you can do whatever you want with it. He's actually cited to actually invest part of that loan into purchasing more Bitcoins. But that's just one example of a Bitcoin collateralized loan in operation, because there is that emerging need, at least for my side, I'm seeing that frustration, ongoing frustration as to why I need to part with my Bitcoins in order to sell them off, in order to get the gains, and then I have to worry about a taxable event. I incur tax payments to my tax authorities, which is not the case with these Bitcoin collateralized loans. But like I said in one of my earlier videos, you need to do that research. You need to ensure that the actual Bitcoin collateralized loan lender, like Strike, is a registered security in your jurisdiction, because they need to be able to have authoritative licenses in order to operate these type of loans. But nevertheless, this is something that we're seeing as a result of this enlargement of the Bitcoin ecosystem into the mainstream. It's not just acting as a treasury reserve, but also increasingly now as a development company through the issuance of these financial products where Bitcoin is bolted on as a component feature of those. And it also raises the important point about the need to take self-custody more seriously, more than ever before, because these treasury companies and also these development companies focusing on Bitcoin ecosystem, there's still counterparty risk. And I recall vividly Michael himself have made that painfully clear. He actually raised his hand and said, well, his company's strategy, used to be called MicroStrategy, is still nonetheless that counterparty risk, which investors ought to do their own due diligence and satisfy themselves whether it's a tolerable risk that they're able to handle and to stomach. So this is the reason why investors ought to do that kind of balancing act as to how much of their Bitcoin holdings they are willing to place under the custodianship of these counterparties versus holding the rest of your holdings, Bitcoin holdings or digital asset holdings, through your Trezor device or your Nano X ledger device under self-custody regime. But of course, that comes with additional responsibilities. You need to be wary about not falling foul to possible scams, because the scams are increasingly, unfortunately, as with every new technology, there is that appetite for scammers to exploit the vulnerabilities of that and start poaching Bitcoin hodlers to release their private keys, their seed phrases, passphrases in their websites, or through SMS or through tuberous links in emails, which is all the more reason why you ought to completely divorce yourself from all of that and just keep your private keys safe in a confidential means. Again, I have a separate podcast series that will give the tips and tricks on crypto measures you ought to consider taking in place to avoid being approached by these scammers. So there's a lot of things happening in the Bitcoin ecosystem, and Michael is right in that the Treasury companies, the trend has been set. There's going to be more and more public companies following suit. There's currently over 150 publicly registered companies around the world who've adopted what Michael Saylor's strategy team has set in terms of the Bitcoin standard. So that's the heart of Saylor's blueprint. Corporations are no longer just buying Bitcoin, they're issuing debt, building financial products, and transforming Bitcoin into a core treasury asset. But with this growth comes counterparty risk. Whether it's Strike, 21 Capital, or any future Bitcoin development company, you still need to balance how much Bitcoin you entrust to third parties versus how much you secure under self-custody. This trend is only exhilarating, and the companies that adopt the Bitcoin standard early will shape the next decade of finance. If this breakdown helped clarify the shift, hit that like button and share it forward, and subscribe for the next deep dive. That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real-world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.